And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good afternoon. What a hell of a Wednesday. Still Wednesday. May the 18th. I'm John Hoagland. Thanks for trusting me with your time. Hope everybody's okay today. These are really tough days. They tend to exhaust me. I'm sure they've exhausted pretty much everybody. So I'm sure we're all well aware. This is probably the biggest down day since 2020, when we were coming into the COVID. Inflation, stagnation fears, and profit erosion has sent stocks sharply lower today. Yellen is blaming the Ukraine war for a part of that, and I'm sure that has something to do with it. A lot of the talking head doomsdayers are talking about sometime this summer, a 75% pullback off the high in the NASDAQ and a 45% pullback off the high in the S&Ps possible through summer. I'm not saying it's not possible, but gives us yet something else to pray for. And I am certainly not going to be checking my 401k anytime soon. Just thinking about looking at what happened in the markets. Of course, we're going to take a look and see what happened on the charts here. But the E-mini S&Ps and the NASDAQ, we saw this morning we were in a technical pattern that could provide a big downside opportunity. And it certainly did with the additional information and fears that came into the marketplace. Yes, S&P's closed 4% lower today, 5% lower in the NASDAQ. The Dow closed down 3.6%, down approximately 1,200 points. I remember in '87, the crash. I think the Dow lost 504 that day. So we're more than twice that much today. Of course, the percentage is not the same, but just the sheer number of loss. It's kind of staggering, and it's kind of difficult to deal with. Crude oil had the same kind of thing. I think economic fears hit prices as crude closes down 2.5%, even though the EIA announced a 3.4 million barrel drop in inventories. So some question as to potential demand as things continue to kind of get out of hand here. Crude oil only slightly affected by the risk-off move in the equities today. Of course, we're going to take a look at that on the charts. Dollar strength takes price back below a weekly kickoff high in the euro. The 10-year weaker rates through the day auctioned price higher through the session. Perhaps an opportunity up against the lower trend line of the bear flag that we've recently broken out of. And the nat gas economic fears have stalled the rally, and it basically closed right on the weekly kickoff level. That may be a little bit magnetic for us. Again, I'm hoping that you had a good trading day. If you didn't do anything, I would consider that a good trading day today. If you knocked it out of the park, great for you. Very difficult trading day. As always, try and make sure that you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome here on the recap. Subscribe to our YouTube channel so you get notifications when we do go live. Gonna check on my peeps here, see how things are going. See some comments here I want to just kind of talk about. And Blake Roberts is excited to see what I have to say today, I guess, or what all of us have to say. It was definitely the worst day of trading for him. Luckily, I'm still on the simulator, but man, every time I think I'm getting in days like this happen. Well, I don't know, Blake. Retail traders tend not to have the kind of experience to handle days like this. The tendency is to always be thinking, okay, I'm going to find the bottom of this thing and I'm going to have a nice pullback to the upside, which on days like today are obviously a mistake. The market just really didn't pull back much at all. What's difficult on days like this for me is to be able to get into the market, a market that's already directional, already moving to the downside. My temptation, which is also very challenging for every trader, is you see it moving, you want to go with the momentum, and it's not the wrong thing to do, but I always tend to do it like on a brand new low, and I put in the new low, and then we get the pullback, and I have to withstand all that heat as the market kind of pushes against me, and I get that fear that, okay, now I just sold the low, and I get out of it, and then the market turns and continues to the downside. So you can get burned both ways when you're trying to catch a falling knife. Either you're trying to catch the knife before it hits the floor, or you're trying to catch the knife long before it hits the floor so you can throw it to the floor. Either way, it's very challenging, and I think part of the challenge is it's a pattern that we're not used to trading in, and it's very difficult to change the patterns that you're looking at in trading, and quite often it ends up stripping our gears and stripping us of our money. So, Blake, if you had a hard time today, you're not the only one. When we're looking at a strong directional move, be it to the downside or the upside, the market seems to try and keep us out. It tries not to let us into the market. A real strong directional move, we're looking for pullbacks, we're looking for areas where we think the market might pull back to, and it always seems to stop short of those. And how do we know? We don't. We don't know. So if we are lucky enough to find the pullback, to get the short, to get the thing moving in our direction, and we fall in love with it on a day like today, you can have some wildly profitable days. Most important thing is don't get ripped up. You got to be here to trade for tomorrow. And if you were trying to pick bottoms today, it was a tough day. Even trying to get into the move was a hard day today. So days like this happen, and through experience and knowledge and some time, I'm hoping that everybody will have a better opportunity or a better chance at being able to monopolize on a day like today. If you were short right off the open, God bless you. I hope you kept it till the close. If you were trying to get into the short, don't sell the low. Wait for a pullback. See if you can get the right pullback. Get in. Manage your risk. Time stop it if you have to. But it's a very challenging day on days like today. And like I said, these days tend to be really exhausting for me. Tachyon, hello. Blake, by the way, good to see you today. James, good to see you. Everyone's day. I'm sure we have a vast array of outcomes from today. Spencer, hoping everybody had a good day. Bill Phillips, good to see you. George, good day. Traders, bad day today. Well, overall in the investment world, yes, most certainly a tough day today. James Swan, bad days are the most educational. Just hope it wasn't too bad. Of course, we don't want to put ourselves in a situation where we can't play tomorrow. Charles March, hi all, what a day. Could never find a place to jump on the ride down. Okay, we were talking about that. It was a day when the market just tried to keep us out. Very directional days tend to be that way. Feel like I missed out on a big party and I need to get my head clear. That, you know what, that's that's probably what a lot of people are feeling like, but it's better than trying to catch that knife and getting cut. If you stayed out today, if you don't have the experience to get into a day like today, you were probably better staying out. It's not the last trading day. It's not the last time we're going to see an opportunity like this. Now that we've seen an opportunity like this, maybe the next time it happens, we'll say, aha, I've seen this before. I know what to do. Think about what happened today. Journal the trades you took today. Think about how the market played out today. So you're quicker to recognize the next time an opportunity like this comes. And it wasn't just inflation, stagnation. It wasn't just that. There were technical things that were pointed out this morning on the forecast that provided us the potential, or at least the hypothesis, that something like this could happen today. And we'll review that in the charts. Blake saying, same, I wanted to wait for a retest of some sort to get out of my buy. Just can't learn to use a stop loss. You got to use a stop. You got to protect yourself. Always wear a stop. Charles March, I hope what I have to say is impactful and helps you moving forward. That's all I can say. Thought the gap last week would close today, but just ticked by without a stop. Luckily, I'm on sim though. That's a good thing. Finished up 1,000, only taking longs. Dan, you seem to have a gift for that. You say that you catch these bounce opportunities on directional days, and man, I wish I had that. I've known people in the pit that had that. They just had the sense for when a short time frame turn was going to happen, and they were able to take advantage of it. So, hats off to you, Dan. That's a gift, and you can make a fortune with that gift. Good afternoon, Denise. PD did the two. No. It was so late by the time the Nasdaq got to down 5%. The limits were expanded by that point. Fed is basically saying we're going to let the market correct. If we don't see asset prices come back down, we're going to hike rates until they do. Yeah, well, I mean, when you think about the Fed's dual mandate, they have a dual mandate. Well, some say they have three, but the dual mandate says the Fed's job is to keep prices stable, not doing a good job of that right now, and to provide full employment. Well, according to the unemployment numbers, they're doing a pretty good job at that. So they're focusing on stabilizing and bringing prices back down. I'm looking forward to the open interest numbers tomorrow as well, Scott. I was going to talk about that in the charts. Of course, we want to see if we brought a whole bunch of new sellers into this market. That new business may mean we may be heading lower. Learning it's really better just to get out and reestablish for sure, especially if things aren't going your way. What did I just do here? I had level 2. We're back. Good to see you, level 2. I'm the guy that said, well, Dan, we've all been the benefit of watching our short time frame direct competitors get too short and riding the wave when they get out. And, that's a pattern that we're all very used to. And you seem to be good at finding that even on those down days. To me, that's amazing. How much Hogue money did you make today? My goodness. I didn't get hurt. That's all I'm going to say about that. Michael Knight had to reset today. Sorry about that. Finished good on the reset, though. That's a good thing. Chris, appreciate the input about the market not pulling back to where you think it should. It helps a lot. When the market is directional, it's almost like the market is trying to keep you out. It gets close and goes, bye-bye, I'm going that way. It just seems to be the way. Core stayed flat today. No trade. You didn't risk anything. It's a big risk day. You did nothing wrong with that, Core. A whale jumped in on options at 4,000. Big hug money is going to be very interesting tomorrow because there should be very good opportunity on the open. James, we're in this together, of course. Funded traders must use stops. It's in the terms. Yeah, and you got to use stops. I mean, think about it. You put on a buy and something happens and liquidity dries up and you get a huge move to the downside. And if you don't have a stop in, you're at total risk. If you have a stop in, you're probably going to have slippage in that case, but at least you're going to get out. Vast majority of the time in the thicker markets, you're going to give up 1 or 2 ticks. I mean, I've seen gold give up 30 ticks of slippage on a stop, but that's the game. That's part of it. Is you got to keep yourself protected from those. See, I like this. Emily, volume profiles leveled helped me navigate this crazy downturn. Was a great day for my shorts. Emily's onto something there with the volume profile. You get to you get those pullbacks to little short time frame high volume nodes. Those might be interesting areas for you to look for an opportunity to get into a move of this magnitude. Charles, I'm glad that you liked what I said. Yeah, you feel stuck. You didn't lose anything, but that's good in and of itself. Of course, today there's lots of bad stories of traders that overtraded, did the wrong things, got emotional. This is an account buster day. Imagine a lot of the clearing firms lost a lot of customers today. Yeah, in a world where you can finish negative, not losing money is winning. Absolutely. And staying flat today was a smart strategy, especially for those that have never seen situations like this. I am historical flatness on Discord. If you ever visit, you show the process. I'm on Discord, but I don't really have the time to really get that involved in it. Maybe I'll try and work on working my way in there a little bit. Rosevone Bird the Third. I got hurt, but it's all right. I'll pick up and try again tomorrow and be more risk conscious. Rosevone, it's nice to meet you. I don't know that I've ever seen your chat name before on the market recap, and it's a pleasure. I'm glad that you're here. I'm here to try and help. Top Step's here to try and help, and we're always looking forward to all of your success. It's always annoying to me when I don't follow my plan, and it doesn't end up going, and it does end up going in the direction I placed when I don't hop off the train early. Staying in those trades is a hard thing to do, especially those pullbacks. Jim Wolf trusted himself today in the trade plan. Finally, 2 solid shorts for 30 points total. Nice job, Jim. Followed your plan. James, overtrading always leads to loss. And the time it doesn't, it just reinforces that bad behavior. Level 2, I took the 39.65 and was too afraid to go high leverage, but that's the game. Micros for the win, no problem. My goodness, John, could you tell anywhere on the S chart that today's sell-off is coming? How and where? Let's look at that. I've got the daily chart up here. So, my goodness, if you weren't here for the market forecast, we're going to take a look at what we were thinking, what we were seeing, what we were talking about, and how much of an opportunity this really kind of presented itself to be. Let's take a look. All right. Do we have an echo? Is there an echo? Do you guys have an echo? Or is the sound all right? Love and peace, 25 bucks on 2 micros, better than nothing. Nope, crystal clear. Okay, all right. Thank you, Spencer. No echo. All right, good. So here's the daily in the S&Ps. Thank you, guys. All right. So the bigger picture. This is the daily. Here's our all-time high. Low, 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 high, low, high, low. We've been putting in lower highs and lower lows. The longer time frame, the longer picture is that this market is heading to the downside. The other thing that we were looking at this morning is always open interest. Now, this morning, the preliminary open interest said that we had lost 7,500 in open interest on this push to the upside yesterday. it comes to fruition to where we lost 17,000 in open interest on that push to the upside. So one of the things that we see when a market is directional and longer time frame like this is opposite moves lose open interest. When we think about the auction process, and when a market is moving in one direction and it loses volume and open interest in one direction, it's likely to change direction. We know the bigger picture is to the downside. We're seeing rallies hollow. They're low volume and they lose open interest. So we said this morning, we said, okay, well, we tested, we closed up above this important inflection level yesterday, but we lost open interest. We didn't see new business. We didn't see new buyers. We didn't see anything telling us that there was a large amount of interest in continuing this move to the upside. As a matter of fact, quite the opposite. Shorts were liquidating instead of longs getting in. So we end up with the bear flag. A bear flag is when the market is directional in the longer time frame, and you get moves in the opposite direction on low volume and lower open interest. That creates the bull flag. It's just a reckoning of inventories in multiple time frames. When we consolidate like this, it's multiple time frames consolidating and evening out their inventories. Once the inventories are even, then the market can continue its move to the other direction. So here's our bear flag from the past 3 sessions. I'm going to try and make this as visible as possible. So here's our bear flag, the low from the 12th, small range, low volume, small range, low volume, small range, low volume, lost open interest yesterday. We had 1, 2, 3 points of contact on this trend line, which did not really present themselves till yesterday. Once we put that trend line in, overnight, we broke out below that trend line. Now to make this a little bit bigger to look at. We broke out below that trend line. We came back to that trend line, and this again is in the overnight session. I was sleeping at this time. It's 5 o'clock in the morning, probably thinking about getting up. That's about when I get up. I probably should have come downstairs, turned on my charts right away, and said, looks like we may break out of this bear flag. If this bear flag breaks out, the target for it is the base of the late flag, the low of the 12th, all the way down here, last week's low. Do we know that's going to happen? No. Do we hypothesize it's going to happen? 100%. Just because we've taken out the low of this move didn't mean we couldn't come back up to this level the way we did in the overnight, and then continue the move to the downside. It gives us good opportunity to limit risk. Instead, the market drove below weekly kickoff low. 40.48 was weekly kickoff low. Our high for the session here, 40.41.50. The market opened. It looked a little bit higher above the opening range, and once it left that opening range and that little hook above the opening range at the upper extreme, the game was on to the downside. My dream level for an opportunity on this move to the downside would have been 40.48. We didn't get there. So now I would be kind of sucking wind, trying to find my opportunity to get into this move. Okay, so not only was there fundamental information apparently that came out throughout the day, at least enough fundamental information where investors got nervous enough to start to look at a risk-off opportunity here. It was as much a technical move to the downside as it was a fundamental move. Okay, so I see my goodness saying, do we also see a short day tomorrow? The day candle looks menacing, doesn't it? Well, what is open interest going to look like tomorrow? Somebody said it's going to be interesting to see, and I agree with that. If we see a large increase in open interest and volume looks impressive, then I'll be continuing to look for the opportunity to sell this market on strength. It's going to be a challenging day tomorrow, as if today wasn't challenging enough. Do I see a short tomorrow? Well, I certainly see a test of last week's low and the base of the flag here. So I don't think we're done to the downside here by a long shot. We've still got another visual down here, this naked point of control from the 12th. And we're looking to see if we can fully do this measured move back to last week's low. Drum Lab. Hi, Drum Lab. It's good to see you. Welcome to the market recap. Hopefully you check out the forecast once in a while. Haven't seen your name yet, but it's always a pleasure to meet you. Anyone else struggle with feeling guilty when you make money shorting? How do you get past this? Drum Lab. I'm going to go to this for a second. I've struggled with this quite a bit. Sometimes if you really nail the market, you make so much money, it doesn't seem that you've actually earned it. But nothing could be further from the truth. You have the ability, you're in the right place to make as much money as you think you're worth in these markets. If you're worried about somebody else losing money because you're making money, think of it like this. Do you remember, hopefully you'll remember this, Butch from Pulp Fiction. He was the boxer, and he set up a bet for himself against somebody who he had said that he was gonna take a dive so this guy could make money, but he bet against him. And he's in the boxing ring and he wins the match and he jumps out the window and gets in a cab. And Esmeralda is the cab driver. And Esmeralda hears on the radio that one of the boxers had died. And she says, so what does it feel like to kill a man? And Butch says, what are you talking about? She says, the other boxing man. He died. And he says, well, excuse me, my goodness. And he says, give me one of those cigarettes and I'll tell you. So he lights the cigarette and says, you want me to tell you what I feel about Floyd? He says, well, if Floyd was worried about that, he never should have gotten into the ring to begin with. So that's all I feel about it. So when you think about your competitors, the people that you're taking money from, if you look at it that way, and you shouldn't, because DrumLab, these people have no problem taking your money, and this isn't always just about money. Think about the service that you provide to the marketplace. The trades you took today, maybe somebody else needed to get out, and you alleviated them of their risk. You're here to provide liquidity for the longer time frame traders. That's what speculators are here for. So it isn't just the fact that you're here to make money. You are actually providing a service to the marketplace, and for that service, you have the opportunity, not the right, no guarantee that you're going to make money, but you have the opportunity to earn money, and you have the opportunity to earn a lot of money, and there is a large abundance of money here. Lacey, what are you doing? What are you getting into over there? Lacey, do you feel guilty when I give you treats? Do you feel guilty when I give you treats? She's a little camera shy today. All right, let's rip through the rest of these charts. All right. So we're basically going to be looking at the same thing here in the NASDAQ. The NASDAQ is presenting and has been presenting as a much weaker market. We're down below 25% off the all-time highs. And Similar situation. We've got the bear flag, unable to maintain price up above the 25% off the all-time high level we talked about yesterday. Here's the 30. I mean, it almost looks like the same market. I haven't checked the actual in the NASDAQ for open interest, but I know we lost about at least 2,700 in open interest yesterday. So the move was set up. Longer time frame structure to the downside, move back up to the upside, and a big move to the downside upon breaking of this trend line here. And it really picked up during regular trading hour session, which I know that our overnight shorts really appreciated that. Did we even look at crude oil yet? We probably should. So, economic fears, kind of questioning the demand for crude oil. Is that true? We know that there was a draw in crude oil. Was it 3.5 million barrels according to the EIA? That should fundamentally make price go auction higher, but it auctioned lower. We were down 2.5% today. Here's the 30-minute chart. Hello. Remember, we're in the July contract now. July contract has far more volume. If you didn't do it yet, do it tomorrow. The market opens, things start to worry, and the worry continues. So we got 108.50, the weekly kickoff high for this week. We broke out above it on Monday during regular trading hour session. We held. Now we're back down below it. This might end up being somewhat of a rejection area. Again, this 108.50, the July weekly kickoff high, might be somewhat impactful for the rest of the week. Gold. We looked at gold and we were in a range. We're still in that range. Very small, very little reaction to the risk-off activity that happened today in the equities. I'm not sure what to think about that. Volume wasn't great. I know we're coming into rollover in gold, so that's going to make, of course, volume and open interest a lot more difficult to read. But here's the session from today. We opened, we rallied, but we didn't really go anywhere. Settlement's going to be right about here, very close to the settlement from yesterday. Value moved lower, but value is still largely in this area where we've been for the last three sessions. I'm looking forward to seeing a hint in open interest or something that's going to tell me that there is a move coming in gold, and it's going to be a big one, I think. I don't know anything, but I'm thinking. See, the dollar today was a little bit stronger today, so that's pushed price back below weekly kickoff low. We even had decent open interest yesterday, approximately an addition of 5,000 open interest on a breakout above an important level. Well, it didn't spend very long above that level, did it? Here's that settlement. Overnight shorts pushed back the settlement, a little bit of an overnight inventory adjustment there. But again, weekly kickoff offers a really decent downside opportunity. A little bit of risk in this. But if you caught it and didn't get stopped out, this is a pretty decent trade to the downside. We've got all kinds of visuals and weak structure down below with which to recheck. We've got this gap all the way down to here and this naked point of control before we get an opportunity to see weekly kickoff low, which was wonderful for us last week. 10-year. Man, am I tired. I am going to get a good night's sleep tonight. The 10-year, we had a potential breakout. We did move lower yesterday. We did add a little bit of volume, nothing tremendous. There it is. We even added 4,300 in open interest on this push to the downside. But in much the way we talked about the equities today, this is not in the right spot. There it is. There it is. So here was our breakout in the 10-year yesterday. We had a decent move to the downside. We settled lower. Today, we've come back higher, but it doesn't change the fact that until we break out above this trend line or weekly kickoff high, I'm not going to continue to look for opportunities to sell strength. Got to keep an eye on the rate. The rate started to slip lower today. So, James, good night and God bless to you too. Rest well. And one last thing for the nat gas, settled right on weekly kickoff high. We saw open interest increase yesterday. You see an auction that seems to be at least maintaining its ability to continue to price higher, to advertise price higher. A little bit of a road bump today. So again, it's settled basically right at weekly kickoff high. Value still moving higher. The range expanded a little bit today. You have to see if the open interest increases on this pullback off the high from this session today, or if we lost open interest. And I wish there was something that was so clear we could be ever so confident in every trade that we take, but unfortunately, that's a unicorn. Exist. Boy, this was a long recap today. You guys are still hanging around too. What else happened today, at least in history? I don't know if all of you guys are old enough to remember this, but in 1980, today's the day Mount St. Helens erupted. It's in Washington State. I remember it. Yep. What about in music? Got a couple of cool music birthdays today. We have George Strait of country music fame. We have Rick Wakeman from Yes. But he also worked with a lot of other folks, like Space Oddity from David Bowie. He was on that recording. He was on with T-Rex, Elton John, Cat Stevens. He worked with a lot of people. 1974, and if you remember this one, I know I do. Unfortunately, Ray Stevens had a 3-week run at number one on the U.S. singles chart with the novelty song The Streak. And if you remember that, you're as old as I am. 1985, Simple Minds had a number one on the U.S. singles chart with Don't You Forget About Me. From Breakfast Club fame, that movie, The Breakfast Club, they asked to record, to film that at the high school I went to. There was one scene from the high school I went to, and it was at the very end when Judd Nelson is walking across the football field. That was the high school football field for my high school. And no, I didn't play football. In case you were asking. Anyways. All right. 5 years before I was born. Oh, Spencer. All right. Well, let's call this a recap. Thanks for hanging out with me today. It's always fun to just kind of review and think about what the markets did and what we're doing. So, yeah, there you go, Emily. I feel I've paid enough market tuition to never again feel bad about taking a profit. We didn't get where was that guy? Well, hopefully Drum Lab appreciated the the thoughts and my thoughts and everybody else's thoughts about, we're all here. We're here to make money. Don't worry about the other guy. It's kind of a harsh way to think of things, but it's the truth. Outside of the markets, be good to yourself and be good to others. Be kind. Make sure you say a prayer for world peace, peace everywhere. My goodness, this whole world has gone crazy. Get a good night's sleep tonight. We got a long day again tomorrow, I'm afraid. But that gives us opportunities. So, again, trade well. If you're trading tonight, make sure you got some bullets left for tomorrow. We may see some more fireworks. So, get a good night's sleep, and I'll see you then. Have a good night.